Hi everyone. Welcome back to our channel, where we simplify complex insurance concepts for those preparing for their insurance license exam. Today, we're diving into determining the proper amount of life insurance and exploring its personal and business uses. By the end of this video, you'll understand how to calculate life insurance needs, the different approaches to determining coverage, and how life insurance can protect both individuals and businesses. Let's get started. 1. Determining the proper amount of life insurance. Planning for the income needs of survivors is crucial. Here's how the process works. 1. Gather information. Collect personal details, ages, health history, and financial data, wages, assets, investments, savings. 2. Identify objectives. Understand the client's goals, e.g., protecting family, paying off debt. 3. Analyze financial condition. Review current finances to identify gaps. 4. Develop a plan. Create a tailored life insurance strategy. 5. Review periodically. Update the plan as circumstances change. Life insurance proceeds often replace lost income or services. Producers must help clients determine the proper amount of coverage, considering retained capital and avoiding forced liquidation of assets. This method calculates the capitalized value of an individual's future earnings. It's based on 1. Projected earnings. Multiply annual income by years until retirement. 2. Expenses. Subtract taxes and living costs. Example, if John earns $50,000 annually and plans to work for 20 more years, his human life value is $1 million. A $1 million policy would replace his income if he dies prematurely. 3. Needs approach. This approach focuses on the family's financial goals, such as 1. Education funds. 2. Emergency savings. 3. Debt repayment. 4. Retirement income steps. 1. Calculate total capital needs, e.g., funeral costs, mortgage, education. 2. Subtract liquid assets, savings, investments, Social Security. 3. The difference is the amount of life insurance needed. Example, a family needs $500,000 for a mortgage, $200,000 for college, and $300,000 for income replacement. They might buy a $1 million policy. 4. Other approaches. 1. Multiple earnings method. Replace a set number of years of salary, e.g., 5x annual income. 2. Interest-only method. Maintain family consumption levels using policy interest. 3. Single needs method. Cover specific needs like loans or education. 4. Capital needs analysis. Address immediate cash needs, e.g., final expenses, taxes. 5. Seat of the pants method. Arbitrarily select coverage, not recommended. 5. Personal uses for life insurance. Life insurance can be used for 1. Final expenses. 2. Estate protection. 3. Survivor income. 4. Education costs. 5. Debt repayment. 6. Retirement income. 7. Charitable contributions. 8. Emergency funds. 9. Cash accumulation. Example, a $500,000 policy can pay off a mortgage, fund college, and provide income for a surviving spouse. 6. Business uses of life insurance. Life insurance is vital for businesses to 1. Protect against the loss of a key employee. 2. Fund buy-sell agreements. 3. Provide executive benefits. 7. Key employee life insurance. This protects a business from financial loss if a key employee dies. The business owns the policy and receives the payout to cover losses or find a replacement. Example, if a top salesperson dies, the business uses the payout to hire and train a replacement. 8. Business continuation plans. Buy-sell agreements ensure business stability after an owner's death. They can be funded by life insurance. Types. 1. Entity plan. The business buys policies on owners. 2. Cross-purchase plan. Owners buy policies on each other. Example, in a partnership, if one partner dies, the surviving partners use the insurance payout to buy the deceased's share. 9. Employee benefit plans. 1. Deferred compensation. Pay employees later, or e.g., retirement. 2. Salary continuation. Replace executive income after death or retirement. 3. Corporate-owned life insurance, COLI. The company owns policies on key employees. 4. Executive bonus plans. Employers pay bonuses for employees to buy life insurance. 5. Split dollar plans. Employer and employee share policy costs and benefits. Conclusion. Understanding how to determine the proper amount of life insurance and its personal and business uses is essential for anyone preparing for their insurance license exam. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more insurance insights. See you next time.